Yes, sir, coming. Hello, sir. Check 1 2. 1, 2, 3, 4. Check, check, check. Hello, 1, 2. Yes, sir. Unmuted, sir.
Thank you. अपना तो लग रहा है वो ठीक है। चलो जितना था उतना ही है रिजाल्व हुआ अब इधर के बाद जाना पड़ेगा मामला बता दे दो वो साला क्या बताएगा हमको नहीं पता इसी टाइप की दूसरी भाषा नहीं अब मैं पहले सोच रहा हूँ कि आप चेक करो मुझे लगता है स्टूडियो सामने होगा आ जाओ वो
जी
कहाँ अपलोड हो रहा है
चलो ठीक
Okay, you can send. Yes, yes.
या
Good evening, everyone, and thank you for standing by. We welcome you all for the Q4 FY 2022 result announcement of Indian Bank. At this time, all the participants are in a listen-only mode. After the speaker's presentation, the forum will be open for the Q&A session. I would now like to turn the conference over to our speaker, Shri S.L. Jain, the MD and CEO of Indian Bank. Over to you, sir.
Good evening to this post result media call. So we'll do presentation of our performance and then we'll have a Q&A. So the performance, next slide. So you see the business of the bank has grown by 9% on a YOY basis, and we have crossed the 10 lakh crore business mark. Deposit of the bank has grown by 10% and we have reached to 5.90 lakh crore. Advances of the bank has grown by 6% and we have reached to 4.2 lakh crore. Under deposit, our CASA has grown by 9%. Under CASA, saving bank deposit has grown by 8% and current account by 14%. In a credit side, we have grown by 6% and our RAM advances are now 61% is against 58% of last year. In RAM, retail, agri and MSME, we are growing 11%. Under RAM, in retail, we are growing 15%. And under retail, we are growing under housing loan by 13%. Under auto loan by 15%. Under personal loan by 42%. And jewel loan 25%. In all, in retail, we are growing 15%. Likewise, in agri, in crop loan, we are growing 6%. In investment credit, which is the need of the hour, we are growing at 46%. Agri allied, animal husbandry, fisheries, we are growing at 88%. And infrastructure, we are growing 13%. So in agri, we are growing 12%. In MSME, we are growing 6%. In MSME, under medium, we are growing 9%. So put together, in RAM, we are growing 11%. In corporates, we are growing quarter on quarter. Of course, YOY, we are negative by 5%, but you see our performance in September, December and March, around 3,000 crore we have added in December and around 3,000 crore in March. So we are growing in all by 6%. As far as asset quality of the bank is concerned, asset quality is continuously improving. Our gross NPA has come down to 8.47%. YOY increase of 138 bps. Likewise, our net NPA has come down by 110 bps from 3.37 to 2.27. On a QOQ basis, December versus March, our gross NPA has come down from 9.13% to 8.47%. Likewise, our net NPA has come down from 2.72% to 2.27%. That is a reduction of 45 bips. Our PCR is improving from 85%. Now we are at 87%. As far as our profitability is concerned, on a YOY basis, our net profit has grown by 31%. 31%. The net profit we achieved is 3,945 crore, is against 3,005 crore in last financial year. Likewise, the operating profit of the bank has grown by 16%. We have grown from 10,967 of last year to 12,717 crores. So our net profit is growing, our operating profit is growing. Our operating profit is growing on the strength of our net interest income, which has grown by 7%. Our fee-based income has grown by 8%. Our non-interest income has grown by 22%. So the operating profit is on the strength of NII growth, on the strength of other income growth. And as far as quarter is concerned, we are having a net profit of 984 crore, is against 1,709 crore of the in the March quarter of the last year. But last quarter was earlier the bank was creating DTA on a yearly basis, and therefore there was a whole year credit in the last quarter, and therefore the profit was 1,709 crore. From the June quarter, we have changed the policy, and on a quarterly basis we are giving. So the numbers on a YOY basis are not comparable. If you see the PBT, it is of course comparable, and we are growing at 10%. On a yearly basis, of course, our operating and net is growing. Bank is maintaining, banking having control on the cost of deposit. So we are having YOY 47 bips reduction in cost of deposit, and a yearly average is 3.97. And our yield on advance, because we were in a declining interest scenario, the interest rates have just moved. So 24 bips. So when deposit cost is reduced higher by our advance cost, as a result, our net interest margin NIM is improved by 6 basis point. Likewise, our cost income ratio is also improved from 48 plus to 46%. So bank's asset quality is improving, bank's gross profit, net profit is operating profit, net profit is improving, bank's business is improving. Now let us go to the second slide. Here it is basically a composition of deposit, wherein you will see that deposit cost has grown by 10% and current has grown by 14% on YOY. Saving has grown by 8%, so CASA is 9%, and we are maintaining CASA close to 42%. Likewise, advances have grown by 6%, and our business has grown by 9%. This is the composition of our deposit, and we are continuously maintaining the saving deposit percentage close to 36%. Now, next, advances, which I just discussed how we are growing. This is a composition of total advances. So retail, I told you 15%, agri 12%, MSME 6%, and RAM 11%. And in the total book, 20% of our total book is in retail, 22% is in agri, 19% is MSME, and 39% in corporate. So well spread over credit base. In SFG, we have grown by 22% on a YOY basis. Under government scheme GACL, we have disbursed around 10,600 crores. In PM Swanidhi, we have disbursed 174 crores. And the outstanding of it has come down to 72 crores. Next. Bank is achieving all target under the priority sectors, is against the mandatory target of 40%. We are at 45.47. Likewise, for in agri is against 18, we are at 21. Small and marginal forward is against 9, we are at 10.47. Weaker section, we are at 12.67 is against 11. Micro 9.35 is against target of 7.5, and non-corporate 20.40 is against target of 12.73. Next. This slide talks about our profitability numbers. So you see, first, I want to draw your attention towards the net interest income in row number 3. The net interest income has grown by 7% on a YOY basis. Of course, the interest income is coming down by 1% because we were in a declining interest scenario, so the interest income has come down, but the interest expenses has come down substantially by 6%. As a result, NII has grown 7%. The non-interest income has grown 22%, and operating profit, row number 7, is grown 16% on YOY. And you see PBT, profit before tax, because last quarter there was adjustment of tax 10%, and net profit is 31% on a year-on-year basis. If you see on a quarter-on-quarter basis, our net interest income has grown by 28%, 28% in March 22 vis-a-vis March 21. And therefore, our operating profit has grown by 15%. Since the QOQ numbers are not competitive, so I request you see PBT has grown, whereas the PAT is showing at a negative on a QOQ basis, but year as a whole, we are grown by 31%. Next. This is a breakup of income. So interest part I covered. Now you see our recovery and bad debt has increased from 618 crore to 1612 crore, row number 6. Likewise, our fee-based income has increased from 2368 crore to 2555 crore, so 8%. Forex income has grown by 70% from 406 to 690. Our PSLC commission has grown by 39%, and our other income has grown 33%. So our non-interest income has grown by 22%. Next slide. So this is basically expenses slide, where our total expenses have grown by and reduced by 2%, whereas our total income has grown by 2%. So income has grown by 2%, expenditure have reduced by 2%, resulting into increase in operating profit. And this year we have provided fully for pensions. Entire 465 crore we have provided for family pensions. Is against the RBI guidelines of maximum up to 5 years. Next. This is our performance ratios. You see our cost of deposit is 3.88 quarter on quarter. Our cost on, we are having tight control on the cost of deposit. And you see that all these ratios on a year basis, cost income ratio reduction, NIM improvement, return on net worth has improved from 10.63 to 12.13. ROA has improved from 0.50 to 0.63. So ROA has increased, ROE has increased, NIM has increased, and as a result, our business per employee, business per branch, net profit per employee, everything has improved. Likewise, your book value per share has also improved. And board of directors have recommended a dividend of 65%. Next, capital adequacy ratios. So bank is adequately capitalized. We are at capital adequacy of 16.53, is against 15.47 of December and 15.71% of March, and is against the RBI requirement of 11.5%. So we are 5% above the minimum regulatory requirement. So we are well capitalized, and our credit RWAs are coming down from 65% to 63% because we are concentrating on retail as well as quality credit. Next. So here is the slide talks about the NPA. So our gross NPA has come down from 36,540 in December to 35,214. In terms of percentage, it has come down from 9.13 to 8.47. Likewise, net NPA has come down from 10,155 to 8,849. That is 2.722 to 2.26. The total slippage in the last quarter was around 3,300 crore, and total recovery, cash recovery plus upgradation plus AUC recovery is 2,800. Bank has recovered total 7,115 crore in the financial year 22 is against 5,275% of the last year. So bank has recovered around 35% more. Our PCR has improved from 85.49 to 87.38, and our PCR excluding technical write-off is improved from 72% to 75%. Next. SMA numbers are coming down. You see, with March 21, it was 2.22%, that is above 5 crore, which has come down to 9.93%, which is more or less at the last quarter level. So SMA numbers are under control. And collection efficiency is improved from 94% in December to 95%. Collection efficiency is continuously improving. From March, it was 88%, now June 90, September 93, December 94, and now 95. Next. This is financial inclusion. So here we are having around 9,657 BCs is against 9,161 last year. So we have added around 500 new BCs. And balance in the PMJDY account has improved from 6,800 to 7,600 crore. Likewise, the zero balance account is around 4.42%. And all operative PMJD account is 88% is against the industry average of 84%. In APY, bank back second position from PFRDA in terms of annual APY performance with 96 average account per branch. Next is about digital transaction. Our digital transactions are improving, which was 60% in March 21 is now 77%. Last quarter it was 76%. So it is improving. And our branch transactions are coming down. Now next. Bank is embarking on the digital transformation journey. So we have started a new project which we call Project Wave in words of advanced virtual experience. Here, from both liability side and asset side, we want to digitize most of our processes. In liability side, we have already introduced tab banking, video KYC. In asset side, we have just launched pre-approved personal loans. We are in the process of doing this KCC, Mudra loan, and slowly to housing loan, top up and other loans. And likewise in tab banking also, we have started with saving deposit and slowly other liability products we will be introducing. So bank is on the digitization plan. Next. This is a slide of MSME Prerna for knowledge updation of our MSME customer, because now we are living in a digital world. So, and there is stress in the MSME. So, and these are the micro entrepreneurs of the country, to give them knowledge, to update their knowledge, to understand the financial transaction, to understand the balance sheet, to understand the cash flow, to understand the how to meet working capital requirement. All this kind of trainings we are giving in MSME Prerna schemes. Next. These are the awards and accolades received to the bank. The best performing bank under SSG linkage program in FY21. State level NABARD for SSG, because we have grown 22% in SSG. In Tamil Nadu state level, we are continuously getting award. In Kerala also banking excellent award we have received. In Atal pension we were the second in the country. These are the awards and accolades received by banks. So this was our presentation, and now we are open for question answer.
Thank you, sir, for taking us through the presentation, and congratulations for the brilliant performance in the fourth quarter. Now the forum is open for the Q&A session. I would request everyone to kindly raise your hand and introduce yourself along with the media house first before asking your question. The first question is from Atmadeep Ray. Can you please go ahead and ask your question?
Namaskar, I'm Atmadeep from Economic Times. I would like to understand that there was a higher provision this time despite lower background provisions. So what was the reason for this?
Provisions are on account of basically fresh slippage and on account of easing provision and somewhere on account of this securities and all. What happened? One of the big account has moved from restructured to the NPN, where the asset classification is being done from the back date, the date when we have done the restructuring, and therefore it attracts higher provision.
So your background provision actually fell, right? This is background provision is 2,445 crore against 2,870 crore in the year ago period. But your total provisions and contingencies has increased to 1914 crore from 1590 crore. So what was the reason for that?
Yeah, point is that last year what happened? Last year, the tax provisions, DTA, deferred tax asset provisions, was made in the last quarter only, and that was a negative, and therefore the overall provision was shown as a negative. What happened? The bank has changed the policy from the June quarter, and this provision we are doing on a quarterly basis, and therefore this last quarter provision is 1/4 of the whole year provision. And since that was a negative provision last year, the overall provision numbers are showing a lower number.
Right. Okay. And what is your outlook for the coming months, given the situation and turmoil happening in the geopolitical situation, as well as that impact we are facing in Indian market? How do you see the credit flow going henceforth?
You see, as far as we are concerned, we are basically more in retail. You see, in RAM sector, we are continuously growing 11%. So, retail housing loans, retail personal loan, auto loans, jewel loan, these are growing, and we expect that this will continue to grow. In a corporate side, of course, it has an impact, but we are growing on a quarter, so we are not seeing any issue. Rather, we are expecting that we'll grow between 8 to 10% in the next year as well.
Okay. Last question from my side. Your capital adequacy is quite comfortable, but despite that, do you have any plan to raise equity, because you need to perhaps bring your government stakeholding down?
No, point is that presently we are at 16.5% against 11.5%, so we are adequately capitalized.
Right.
But we are having a 78% of a government holding.
Right.
So in case of need, we have approached to our board to give us approval for raising funds from the market at an appropriate time in the current financial year. So this is an enabling provision with us. But as far as capital as on date is concerned, it will take care of my growth also, and even my profitability will take care of my growth, because the bank is earning around 4,000 crore of profits.
Absolutely. How much you plowed back this time? Plowed back from profit?
So we have earned around 3,900 crore and around 800 crore of a dividend we have given. So remaining amount is plowed back to the business.
Okay. Thank you so much. Thank you.
Thank you, Atmadeep. We are open for the next question. Yes, Ajay, so please go ahead with your question.
Hello. I'm Ajay Ramnathan from Informist Media. So I just firstly have a clarification. You had said 8 to 10%. So is that for corporate loan growth?
No, bank as a whole. Naturally,
Okay.
our growth will be higher in the RAM sector.
Okay, so overall is 8 to 10%.
In all, if there is a reduction in one sector, automatically other sector will take care.
Okay, okay. And also, I just wanted to get a perspective on your trajectory for NIMS, because as many banks actually have seen a compression in NIMS in this quarter, but you have seen an improvement. So do you expect this to continue going forward?
So now the increase interest scenario has started.
Yes.
Right. But you see in a bank, it takes time to increase the cost of deposit because of lag effect. Only the renewable part of the deposit, only the higher interest rate will attract. Whereas in the advance, immediately the interest income increase, right? And we are allowing a 44% of the portfolio, which is linked to the repo. So naturally, our interest income will start increasing from the increase in the repo. But going forward, whole year, how the RBI will increase the interest rates, repo rate, and what will be the timings, all will have an impact. But in a given situation, you can understand when your advances will have a slightly higher income than your deposit, then naturally my NIM should be protected to that level. This is the view at present.
All right. Okay. Thank you.
Thank you, sir. Can we have the next question, please? Yes, Sergeant, sir, please go ahead.
Hello. Yeah, this is Sergeant from Financial Express. Sir, I just wanted to understand the split between the RAM and corporate as of now, and the plans on your lending strategy going forward. I understand that there's a sentence in your release that your prime focus will be to support the corporate. What are the strategies for the corporate lending, given the fact that there will be much more demand from corporates on the back of infra and other support by the government? So how much you would be expecting the corporate and the RAM split would be balancing going forward?
So in corporate side, we are receiving proposals under the road sector in HAM project. So we are comfortable and we are doing sanctions under the HAM project. But what happens with the sanctions? It will take 2-3 years to complete fully avail, because it takes 910 days or 900 days to complete the road. So slowly your credit will increase. So of course our sanctions are high in the road sector. We are doing sanction on the textile. We are doing sanction under the city gas. We are sanctioning under the iron and steel. We are sanctioning under the gas. So in all sector, basically, customer by customer, we are sanctioning. So we are hopeful that we will have a good growth in the current financial year. And as far as RAM is concerned, you see our performance quarter after quarter and year after year, we are growing in all segment of our RAM, retail in all, whether it is a housing, whether it is a auto, whether it is a personal, whether it is a jewel loan, and likewise in agri also in jewel loan, in investment credit, in agri infra, in all sector we are growing. And in MSME, we have grown 6%, but we are going based on the various sectors or various areas, various places based on ODOP and various clusters based on the clusters. And our experience that clusters NPAs are less.
Sergeant, sir? Sergeant, sir, I hope your question has been answered. Can we move to the next question?
Yes. I have one more thing, like the split between them, like what is now and going forward, at what level you would like to have this to be balanced in your loan book.
Our loan book is well distributed. So 20% retail, 22% agri, around 19%, 20% SME, and 20, and around 39-40 is a corporate. So we would like to continue with that. And you see, in a retail, your spread is good. At the same time, risk is spread and your customer base improves. So we'll continue to have that kind of a strategy.
At present, we are having 61 and 39.
Please.
Hello. Hello. Can you hear me, sir?
Yeah.
This is Balachandra from Hindu Business Line. Sir, I just wanted to ask you about, what has actually driven this 28% rise in net interest income, which is significant growth as we see. So is it because of the lower interest expenses and higher, of course, your interest income has also grown by 10%, but overall, what would you attribute to this growth?
Now, there are 2-3 reasons for that, sir. One big reason, I think eco is.
He has opened it.
You please. There are 2-3 reasons. One is that in the last year, what happened because of Supreme Court guidelines, all accounts have been classified as NPA in the March quarter, and therefore there is an interest reversal in the March quarters, and it has impacted the interest income of the last year. This is one reason. Second reason is that here this time we are controlling the cost, right? And our cost of deposit is here. You see 3.88, 3.89, and over this, even the investment income is improving. So these 2 or 3 major factors, and with the third one is growth in our business. All these are the reason for increase in spread.
And what was the total slippage in Q4, sir?
Our total slippage in Q4 is just a minute. Yeah. So it is 3,298 crore. But is this 3,298 means 3,300 crore? One retail account is included, is a big account of 850.
Can you repeat, sir? I didn't hear. Sorry.
So it is 3,300 crore. So 3,300 crore. Actually, it is. Hello.
Hello. In between, what is it? 3,000?
3,300 crore, sir. And it's 3,300, one lumpy account of 851 crore is a retail asset, or the retail account.
Retail.
So which retail, which retail entity is that? Is it possible to disclose?
Actually, we generally don't disclose the names and all.
Okay, fine.
But it is in the paper.
Got it. Thanks.
Thank you, sir. Siddhi, can you please go ahead with your question?
Hi, sir. Congrats on the results. I just wanted to ask you about your recovery target for FY23, if you could share, and the avenues from which you're expecting these. A breakup, basically.
Actually, this year we have recovered around 7,100 crore. If you see our cash recovery, upgradation, AUC and all. So we would like to have a similar kind of a recovery in the next year as well. So our recovery, of course, the major sources of NCLT, major OTS, SURFACE, sale under SURFACE, and basically These are the 3 or 4 major reasons, and general recovery which we do.
Okay. And your gross NPA currently is at 847. So by what is the number that you want to close the year if you give me a target?
We would like to reduce it further, but it
Any
is very
number?
difficult to give. It is very difficult to give in terms of number. Our intention or endeavor will be to reduce it further.
So this bad bank has not been operational as yet. When are you expecting it to be operationalized?
Yeah, it will be operationalized soon. So those activities have started. In fact, you see 5 account of ours are going to the bad banks. So having exposure of 1,200 crore where we have fully provided more or less.
Okay, sir. Thank you.
Thank you, Siddhi. Do we have any further questions? This concludes our today's press conference. I would like to thank all of the media fraternity for joining us today. Also, for any further query, you can get in touch with me directly or email me at neha.sharma@veritasreputation.com. Thank you. Have a good evening.
Thank you. Thank you all for having interest in the bank. Please support for all our endeavors.